All right, hey, welcome. What's going on? Kind of tired today. It's a late start. It's 12:55 p.m. So I know you're like, damn, you tired. I slept pretty well. Pretty amazing week. First, I want to give a quick hello and thank you for Shaun that came through in the one, two. I believe he came through in uh, three of my live sessions this past week on ES. So I still owe you an EU live session. So be on the lookout for that. So if you catch this video or check it out, I didn't forget. Friday was a kind of a it was a mixed day. So I knew I traded like Monday through Thursday this week, and Friday we were supposed to do that session, the PM session. So I didn't forget, but I ended up back testing, which is what you kind of see on the screen here. So Friday was pretty interesting, um, insane to some degree for me. I know I've got like the John Madden plumbing schematic going on here. So just really quick for me. First, not financial advice. Don't sue me. Not a financial advisor. This is all educational or entertainment purposes only. So derive and take from it what you will. So at the close of Friday for ES, we basically had moved away from what I had marked out. This is an hour, but I had previously been working from my bellwether time frame, which is a 15 minute, and back on a one. So all my executions for the last few weeks have been on a 1 minute chart, which for me personally, that's I want to say that's like a paradigm breaker, not a shift, and I've been very consistent with that, so that's a good thing. But anyway, so we'd broken like a previous lunch hour high here. This technically was set Friday yesterday at 11 a.m. So it took out the previous day. So this Friday took out the previous Thursday buy side liquidity from the lunch hour. So essentially, long and the short, excuse me, I've taken this all the way back in and down. Still looking for the completion of the afternoon session. I was trading the silver bullet hour between 2 and 3. So I basically was looking for a liquidity sweep from the 1 p.m. candle from Friday. So we did get the buy side liquidity swept from that 1 p.m. and then the move back inside. Really quick, I just want to jump over. Yeah, it will. Cool. So I wasn't sure if it was gonna pull over. I'm not inviting or asking anybody in terms of coming into this Discord. I've created this completely and solely for like my journaling purposes. So this is yesterday 144. Okay, so here is just kind of showing you it was a lunch. This is a 1 minute where my cursor is. It's a 1 minute chart. This is the move up and in, and eerily enough, this blue area down here was what I was talking about. I had gone up to a 15-minute time frame, realized that this was a 15-minute fair value gap. So that's why if you're looking at this saying, okay, that's the 1 p.m. low, that's the 1 p.m. high, why is your buy limit here? Simply because I'm looking for not just the liquidity to be swept, but to be swept into a specific area. So technically, my invalidation would have been here, but I just increased the stop. I did all paper trading yesterday. I didn't take one live trade yesterday. So everything was done paper trade and in a demo environment. So it was more or less just kind of refining, looking, watching price action to see what was going to result from that, right? So this next one you see, I actually did get the tap from the 15-minute fair value gap. I will tell you at the outset, I did not hold this all the way back up because afternoon, Friday afternoon, some manipulation late. We've got FOMC news next week. So sometimes there's a setup or there is a run on stops or liquidity that takes place the week prior, later in the week prior to any kind of FOMC news. I believe next week isn't, it should not, but whenever the Fed speak, there's always some level of price manipulation, some sentiment, some movement. So I believe they're just speaking on the rate and nothing really indicative of an increase, a decrease, a cut, or whatever. I think it's just conversation, but the talking points usually lead to something somewhere. So I'm just leery whenever there's conversation. I think I'm only looking at maybe max Monday, Tuesday for a position. I'll probably watch and see what happens on Monday, and maybe it's just Tuesday. And then it's Thursday afternoon, I believe, is when the FOMC meeting or speech is. I think it's 2 in the afternoon. So maybe Tuesday, Wednesday. We'll just have to see how the week plays out. But anyway, back to this. So we did get some movement back long. Again, this would have been the 1 p.m. session high, or basically my target. I set it a little bit higher. Why? Because this up here is also another 15-minute fair value gap, hadn't been violated or anything. So I was literally looking at taking a position that was going to be in between like those extremes. So essentially, I had the framework from a 1 minute time frame from a 2 to 3 p.m. Trade window that basically had two levels of invalidation on either side. So it was just my way of basically being able to frame the trade. This last one, you'll see I actually just got out. So I closed out of this position. Basically, it was some level of premature, but my underlying bias was something more towards the short than this actually completing. Again, I'm looking for potentially maybe a couple of more runs on price inefficiency and pools of liquidity just with next week. So I was paper trading, no big deal. I could have let it run and play out and see what happens, but you'll see here in a moment, why this might have been just me following trade intuition and not emotional intuition. It came within, I guess maybe you could say that's about a tick or two within with taking out that 1 p.m. high, and then it eventually did displace. So this is me just showing you. Same trade, just a little bit different. So this is where it came within that one tick. It did rally back down. So if you notice, I want to say that the wick down, that bearish wick down, was in here, and it immediately popped right back up. So could have held, and it even tapped into. Now you can see this 15-minute fair value gap did tap into here as well. So not saying I was overly successful. However, this very next image will also show you from that 15-minute fair value gap. I did hop into a position. I had a fair value gap here within the confines of this 15. It didn't tap me in. It came up. I had two contracts on here. Again, simulated, but it came up and literally I was a tick short. So I kind of just hopped in here, rode it back down into this area in between the two 15-minute FVGs. So the target basically was right back at that consummate encroachment of the bullish fair value gap. So that's kind of where, yeah, that's the last one. So that's kind of where I left it. So just to kind of give you context so you see what the hell this is that you're looking at, I'll try to clean this up a little bit for you, get rid of all of that. So essentially, I'm still looking for a move short, but it may or it may not be as deliberate coming back into here. So this by itself, that's probably, yeah, you could see where I'm pulling, but I know I've got like a lot of different annotations on the chart. and I'll get this cleaned up before we get started for tomorrow. But just for context purposes, and I'm still on a 1 hour. Excuse me. Let me drop down, and then it becomes a little bit less noisy and a little more clear. All right, there we go. All right, so this entire area, it's a 1 hour buy side inefficient sell side delivery. I'll go back up to the hour real quick because that's where you can frame a lot of your structures. So let me do that and let me do this so that way I can show you clearly. So I'm looking at basically the low of this candle here and the high of this candle here. So this is my fair value gap here on the hourly time frame. So that's the basis of this zone. This is my buy side, inefficient sell side. Okay. Just so you have that framework. Because when I pop down to a 15-minute, you'll look at the same thing and go, what in the hell is that? So again, I'm still framing within a higher context for a more concise, I won't call it smaller, but for a more concise move. So that being the case, we're still looking for, I'm still looking for, at least at the outset, maybe of the week, this Friday, 1 p.m. taken out. So my initial draw on liquidity for this upcoming week is still going to be short. However, I would not be surprised again with the talk or whatever of this buy side liquidity being swept. So, not really being anticipatory, but just one of the things that is possible to happen because it happened yesterday morning. Basically the 7 a.m. Price manipulation at 8:30 tapped in and ran in the opposite direction. The same could be said for either market open tomorrow, Sunday, or even at the open Monday. It just depends on what price does. Again, I have no idea. That's why we're all speculators in this market. So for me, price could either piddle around and not do much. The other thing it could do is it can create a very small range or a sub range, which is kind of what it did earlier this week. I want believe that might have been Monday or Tuesday. It created a very concise range. Usually Asia is concise, but London, I can't remember which day it was. It might not have been Monday, Tuesday. It might have been Wednesday. Very concise, and then you know took out a high, came back, swept the low, but when it swept the low, it took off and went back long. So it's possible to see something like that. I'm just going to be very interested. I'm looking more at this buy side because at some point it would make sense just based on my overall bias. And again, it's just my personal opinion. That's all it is. It's not financial advice, but my personal opinion is that I'm looking for this buy side to be taken out for a deeper run short. I know that the overall sentiment, I know that the overall outlook and perspective for this market is long. I'm not necessarily looking, I'm not one of those people that's going to say, okay, once it runs a buy side, it's short. I'm getting in on the short. I'm going to still need the context because I'm not going to chase it. If it decides it's going to sweep and run, I'm happy for it. If it sweeps, it runs, I'm still going to be looking for a controlled, measured, calculated approach at saying, okay, you've delivered in a way that, you've assumed liquidity, you've caused the market structure shift, below a recent low. Now you're coming back up to take whatever inefficiency, whatever price inefficiency or another pool of liquidity to continue short. I'm looking for that smarter, no pun intended, that smarter entry. So yeah, that's what we're looking at. So again, my particular bias at the outset of the week, looking for this Friday 1 p.m. silver bullet level to be taken, that liquidity to be swept. Long term, looking back here at, oh, look at that. That's another one. So this is Wednesday. So this is a Wednesday close. So there's some sell side liquidity down here from Wednesday. So again, my draw on liquidity this week, short. Again, first short area is going to be this 1 p.m. Liquidity point from Friday. And to kind of give you what I would be looking for, again, the continuation short, sweep out this liquidity, a potential run back to take this buy side. And I'll just go ahead and I'll say this now, so at least it's recorded somewhere in the ethosphere. If indeed we get this sweep, we get basically like a Judas that takes out this low, comes back up, sweeps out the buy side, starts to push, comes back, creates any kind of inefficiency or a reasoning to come back up in here and go short, I'm probably going to be short into like maybe, I think it's like 47.19 or 47.20, something like that. I'm going to anticipate a significant retracement just based upon the levels under which prices moved over the last week and a half or so, especially on S&P. So that's the bias. See you guys later. Thanks again.